Today, I'll be revealing the secrets on how to read order flow and tape and how it's helped me achieve millions of dollars in the stock market in the last 8 years of trading. I'll be going through charts, times and sales, level 2, and volume. Let's go ahead and get started here. So the first thing I'm going to talk about is charts. Where do I start? So I love to start on the bigger time frames. What am I looking for? So I'm looking for key levels, psychological levels, trends, and supply and demand zones. So on the bigger time frames, I'll get bigger key levels and obviously bigger supply and demand zones. So first things first, as you guys can see on Apple, a big level here was 237.50, which we recently just broke out and we're currently trading near that 250. Now from here, I like to work to the smaller time frames. The next time frame would be the 4-hour, and then obviously I'll look and see, okay, I have a trend here. These are things that I need to pay attention to because everything after this depends on the chart as well. So now I have a trend here on the 4-hour that I need to pay attention to. I'll work myself down to the 1-hour. Now I can see I have another trend here at 255. Does it line up with the 4-hour? Okay, it lines up with the 4-hour. So this is a great trend to have because it's on the bigger time frame and it's on a smaller time frame. Then I work myself all the way down to the 30-minute, 15-minute, and then finally the 5-minute. So on the 5-minute, you can see we've been going through a consolidation, which I love, as you guys may know, because with options trading, IV will decrease and it'll allow me to get bigger returns on the breakout when we finally get it. So that's what I'm looking at for charts, right? Also with supply and demand zones, I know a lot of you love these smaller supply and demand zones. When I'm looking at supply and demand zones, I like to at least have it on the 1-hour. Yes, I've had supply and demand zones on smaller time frames, but my favorite supply and demand zones to, chart out on the screen are on the 1-hour, the 4-hour, and then obviously a bigger time frame like the 1 year. Those are my favorite because, they react really nice to them and they're very consistent when it comes to trading. The second thing that I would love to talk about is times and sales. A lot of you see random numbers pop up, different colors, red and green. You guys have no idea what's going on there. So I'll put a quick example of my times and sales here on the screen of me trading so you guys can understand while I talk about it. So the first column you have here is time. So it'll tell you the exact time that it's being executed at. Then you have the price, and then you have how many shares are being executed here on the right. Now, these are going very quickly. A lot of you may, look at this and say, I have no idea what's going on. Well, yes, I do understand. That's why it comes with a lot of screen time. So over time, you'll start to notice different patterns. I'll explain what I look at. So first of all, I explain the columns. The next thing I like to look at is the colors. What do the colors really mean? What are green and what are red? A lot of you think red is for selling and green is for buying. But you have to understand there is no buying and there is no selling without another person on the opposite side. To sell, you need to have a buyer, and to buy, you need to have a seller. So what does red and green mean? So the red means the buying and selling is going on at the bid, which is the lowest point at that exact mark, right? The bid, we'll talk about it, is where buyers are trying to get the cheapest price at. Now, if you see green, that means buyers and sellers are executing price action at the ask price, which is the highest point. That's why we have spreads. It's the difference between the bid and the ask. The green is executing at the highest point, and the red is executing at the lowest point. Now, if we're looking at the upside, I'm looking at more green executions because that means they're very interested. There's higher demand on paying whatever for that stock at that very given moment. So that means people are being aggressive on the green side. Now, being aggressive on the downside would mean you'd see more execution with the red color pop up because those are buying and selling at the bid, which is the lowest point. The next thing I like to do when I'm watching tape is filter. So for different stocks, I filter different ways. For Apple, which is a cheaper stock, I like to filter at 200. Things like Tesla, I'll also keep at 200. Something like AMD, I might even hire it to 500 because how cheap this is, $126. Things like Nvidia as well are $133. So I'm watching and filtering for different stocks with different filters because of how much is getting executed at that very given moment. I don't want to see 1 share, 2 shares, 10 shares. Everybody that's watching here, we can all be buying 1 share, 2 share, 5 shares. Those are very small orders that I don't need to pay attention to. Now, something that I did bring up to other people is traders like to go under the radar. So they might execute a bunch of batches at, let's say, under 100 so it doesn't bring up anything on the radar, where you don't see the same buyer over and over again. So he might have hundreds of orders at like 80 shares per, order. And the reason that's important is because sometimes I'll switch over to that filter and see if I'm missing something. And what you need to know is if you see the same order over and over and over again, it's usually the same buyer. So if I see a batch of 90 shares, right, that's very random, 90, 90, 90, 90, 90, 90, 90, that's usually the same buyer, right? That's one thing that I like to pay attention to and understand on times and sales. A lot of people don't really see that. They'll just think it's another buyer or seller. It's usually the same buyer if you get something random like that, or 87, 87, 87. There are a lot of weird things you can see on times and sales, and a lot of things you can decipher between, okay, is this a different buyer or the same buyer? And that's one of those things that I like to do. Now, you might see the same thing when you filter 200, right? Where you'll have a filter at 200 and you'll see 200, 200, 200, 200. Same thing goes for that. I'm going to assume that is the same buyer or seller every single time. Another thing that I like to do is with times and sales is I'll move this around. So I'll have different filters, like I said. I explain the columns, and then the sizing is what I'm paying attention to. So when I move these filters around, I'm paying attention to the sizing. Are these orders getting bigger? Are the bigger orders executing at the ask, or are they executing at the bid? Yes, we could be pushing up, but every time we push up, we get a big order hit at the bid, which would drop the price a little bit. And I pay attention to that because we can be grinding higher, yes, into our target, and I'll see certain red flags like that where the bigger orders are coming in at the bid when I want my stock to go higher, and that'll kind of force me to either scale out a little bit or get out my full position from there, because it's showing me that as we're moving higher here, the bigger orders keep hitting the bid instead of the ask. When we want something to move higher, we want them to be aggressive on the ask side. Why? Because that's the highest point. When investors really want a stock, they're willing to pay whatever price, and they'll pay at that given moment the highest price possible, and that comes with the market order, quote unquote, right? So that's times in sales. That's most of the things that I'm looking at in times of sales. I use things hand in hand here, so I'll explain when we get to level 2. When we move down to level 2, you'll see this exchange EX that is simplified for exchange. That stands for exchange. Exchange here, you'll see ARCA, NASDAQ. It's just telling you which exchange these are getting hit at. Where is the bid, or where are these orders coming in from, right? It'll be at the NASDAQ, ARCA, the Chicago exchange, whatever the case may be. That's not really important. I'm not really paying attention to that. So this is one less thing you need to look at. The bid here is where all the buyers are willing to buy at, right? 133.90, 133.90, 133.90. These are where they're willing to buy at. The BS here, which is shares that they're willing to execute or have ready to buy at, they'll have 40. But one thing you need to know with level 2 is you need to multiply this by 100. So if it says 40, it's really 4,000, right? So understanding that, 21, that's 2,100. 3, that's 300 shares. 1, that's 100 shares. So these numbers are divided by 100. So 40 means 4,000 shares. 21 means 2,100 shares. So that's what this means over here. Same thing on this side. So this is the selling side, right? Same thing, exchange, what they're asking for the price that they want to sell at, and then same thing here for shares. You'll multiply by 100. Now, what does spread mean? A lot of you hear that word a lot. I say it a lot. It's the difference between the buyer's price and the seller's price. The spread on this, on Apple at this very given moment, we're obviously in after hours, so the spreads are very tight. Sometimes the spreads are very wide. 2 cents. Apple, actually this is NVIDIA, sorry. But NVIDIA, for example, always has tight spreads. It's not something I need to worry about. Something that has wide spreads that I like to pay attention to is Shopify, right? Right now it's after hours, but during the day you'll see exactly what I'm talking about. 115.10 versus 115.20. There's a 10-cent spread here. So those are the things that I'm watching when I'm watching level 2. Another thing that I like to look at are walls. You'll hear the term walls. What does walls mean, right? Walls means, for example, if I have a key level on Tesla at 435, that means there should be a wall of sellers at 435. If there aren't a wall of sellers at 435, then you can't confirm that that's an actual key level. Just because you think it's a key level doesn't make it a key level. So one of the things that I use to confirm that I have a key or psychological level is I'll watch the wall. The wall, for example, let's say the normal size is 40, 50, 60 on Tesla, whether it's on the ask or the bid. Then I see something like 300, 400, 500, 1,000 sitting here at the ask at that exact price that I was looking at for a breakout. That confirms that the wall or key level that I'm looking at, the key level that I'm looking at is an actual level. And the wall is there to confirm my bias on which levels are key and psychological levels. So that's what I use those for. One of the coolest things that my partner broker offers is it kind of automates your trading. And what do I mean by that? Let me show you. Well, pre-market, we all scan for things that we really like. For example, double tops, double bottoms, triple bottoms, head and shoulders, bullish flags. These are all simple things that we look at pre-market or during the day. And the best thing about Moomoo is you can filter this and see what stocks are having triple bottoms and double bottoms. And a lot of stocks here are stocks that I normally wouldn't look at, which is the best thing about it, because instead of me playing the same stocks every single day, I have Moomoo to provide new stocks. And obviously, the stocks that I do usually play, it'll show up on there as well. So that shows me the future of what trading could really hold for us and what advancements AI can really, help when it comes to brokers. So what I want to look at when it comes down to Tesla or any stock that I'm trading is the walls being chipped. Now, when I say walls being chipped, when we get to 435, let's say it's a big wall. How do we even calculate if it's a big wall? I'll calculate if it's a big wall based on the average amount of shares we get per candle. For example, let's say the average amount of shares we get on Tesla is, let's say 454, 230, 3. So anywhere between 100,000 and 350,000. That's the normal amount of shares we get per candle. Let's say we're looking for a breakout at 425, right? And the wall says there is 1 million shares sitting there at 425. So that means we need 1 million shares to break through that 425, right? And the average amount we get in each candle is, let's say, 350,000. The reason that's important to calculate, you use that to say, okay, is this wall too big for this to break on the first try that we get at that wall? That's what I'm looking at, right? If the average candle is 350,000 and the wall sitting there is 1 million, that means we need 3 times the average volume to break through that wall, plus more volume to carry on with the follow through past 425. For example, that may be why you get a wick here at 425. You got enough to break through the wall, but you didn't have enough to hold above here. This is why a wick may happen. You might have a break of 425, but not enough volume to carry through that. And that's why you get a pullback like this, back to 423.50, which would force day traders or scalpers to hit their stop loss and then retry if this comes back in. When you get rid of a wall at 425, what happens is you don't have to deal with the same struggle you had over here because all those shares got executed. There were buyers and there were sellers waiting there. Buyers ate up all the sellers' price, and now all you need is volume to continue to move the stock higher. And that's why you got a smooth ride here on the retry. So those are the things I'm watching when I'm calculating if it's a big wall or a normal wall that we can get through and have follow through to continue over that. It's not just, can we break the wall? No, it's can we break the wall and still have enough volume to continue to move higher above that level. As we get to that wall though at 425, we're going to see chipping, right? What does chipping mean? So if I have 1 million shares sitting at this selling price at 425, I want to see it go down to 800, 700, 600, and that's where you can calculate where you can get in, because sometimes it'll get there, chip 300,000 shares, and then pull back. But if you can time it closer, if you're looking for a scalp rather than a day trade, is you can wait till it gets closer to, let's say, 200,000 shares, where it's already chipped 800,000 shares, pulled back and retested, and then you timed it there and then got in. A lot of people get in too early. It'll only chip a couple 100,000 shares, pull back, hit your stop loss, get back in, it'll chip another couple 100,000 shares, pull back, hit your stop loss. That's not the way to do it. You want to pay attention to chipping, especially if you're scalping, because you can use that to your advantage and have a more precise entry to your breakout. Another thing that I'm looking at or using on level 2 is the bid chasing the ask. Why is that important? So if I'm looking at the upside, I want the buyer to come up to the seller's price to show me aggression and they're willing to buy at whatever price. If the seller has to come down to the buyer, it means the buyers are not too aggressive on purchasing this share at that very given moment. So as I'm looking at an upside or a breakout, I want to see the buyers continue to come and meet the seller's price. And then what the sellers need to do is continue to higher the price. The sellers will notice that. They'll say, okay, the buyers are willing to pay whatever price for my product, which is Tesla, their shares. And they'll continue to say, okay, if they're willing to pay this price, let me try 20 cents more, 30 cents more, 40%, 40 cent more. And the buyers or the bid will continue to move higher and higher and higher until it needs to consolidate or aggression, starts to fade away. And that's when you get the pullback. Then sellers would say, okay, I'm noticing a faint in aggression. I'm noticing that they're not willing to move higher. They're starting to try to meet me in the middle. Okay, let me move my selling price lower. And that's usually the sign that, okay, maybe this is the time to pull back. And then maybe this is where you would exit on your scalp. So all of those things are things that I'm paying attention to when I'm using level 2. It also matters with time of day. So I don't like trading after 11 o'clock because it becomes harder to read level 2 in times and sales because there's a lack of volume and there's a lot of algo trading during those hours. That's been around for 20 plus years in the stock markets at the exchange, right? So I stop around 11:30 a.m. Eastern time because that's where the cleanest understanding of tape and order flow comes in. After that, you'll see a big order come in here, a big order come in there, and they don't really mean much to the stock. You're not going to see your stock move much, and there's not going to be enough clean action on tape for you to follow. The next thing I like to look at is volume. So the first thing I'm going to say to do is I have it on my PC. What I'm going to ask you to do is DM me on Instagram, NOURTRADES, Nour Trades on Instagram. I'll send you the algo for volume. So what this algo on volume does for beginners like you who can't read times and sales too fast is this volume bar will be red or green during, live, right? So as you're watching this candle develop, it'll show you how much of the volume is buying and how much of the volume is selling. We talked about how there needs to be buyers and sellers no matter what. But what it's going to show you is, are they being more aggressive on the ask or are they being more aggressive on the bid? And obviously, if it's red, it'll be more aggressive on the bid. And if it's green, it'll show you more aggression on the ask. And that's why that volume indicator that I have, that's free, obviously, is very helpful for you guys because it'll show you in the midst of this candle while it's going on, how much of the candle was buying at the ask and how much was it selling at the bid, right? And those are good things to understand visually as far as being a beginner trader. For me, I like to use time to sales because I'm getting all the answers anyways here. But for a beginner who needs colors and things to be simplified, that volume indicator is very, very helpful. Now, with volume, I like to pay attention to certain things. Like I said, the first thing is understanding what average volume is, right? What's the average volume on Tesla versus what's the average volume on AMD? That's why having a watch list that's too big for your liking becomes really hard because you won't be able to remember those certain things. What's the average here? What's the average here? You're going to be looking at too many things. It'll be very hard. So as a beginner, you want to stick to 5 stocks you really, really like. And then you'll understand all the characteristics, like understanding what the average volume usually is, how are the contract spreads, how are the stock spreads, all those things come into play. Average volume is important. Remember, for breakouts, we want to have above average breakouts for that particular stock, especially when we see walls there. So understanding what the average volume normally is will allow us to understand, okay, will this have enough when we have above average volume to break through that wall the first try? Or should I wait to the second try? Or should I wait to the third try? All those things come into play. Above average on our breakouts will also confirm that we have the right level. So if I get 425 to break here on Tesla, and the average volume is 250K, and 250K happens, or the volume happens here at 425, it'll show me that it's not actually that important that people, or not important to other investors, meaning that key level isn't really a key level. It's just another level that we were looking at. The above average volume helps us confirm that what we were looking at was correct. Same thing on the downside. If I'm looking at 420 to the downside for Tesla, and we get the same amount of volume that we got on every other candle, showing me that that break is not a key level. It's not a psychological level. It's just another level on Tesla. That's what I use for confirmations when it comes down to volume. Now, with all that being said, it's cool to talk about these individually, but these all work hand in hand when I'm actually trading. When I'm in a trade, I'm not just looking at time to sales. I'm not just looking at level 2. I'm not just looking at volume. And I'm not just looking at, the charts. I'm looking at all these things hand in hand with volume. So I can't just use one thing. A lot of beginners are saying, what can I focus on more so that I can pay attention? Well, As a beginner, I understand things are harder, so that's why you have to size down, try things with one share, try things with one contract until you can get the concept of reading all of this together. Yes, there's a lot going on, but that's why I've been trading for 8 years. Not only that, trade stocks that move slower so you can catch things on time to sales. Level 2, if you're trading things like Tesla, that stock is way too fast for someone who's been trading for, just a couple months. Stick to like things like AMD, things like Apple. Those move on a far more slower scale. Now, for you guys to get a better understanding of me using all these things, I can talk about how to use them. That's cool and all. That's just another, educational video on YouTube. What's best is watch my live streams every single morning on YouTube, on Twitch. While I'm trading, understand what I'm looking at. Ask in the comments, what am I looking at? Hey, Nour, what did you see on time and sale to get in there? I'm going to also be talking about that on my live stream. So that's really what's the best about all this. I live trade every single day so that you guys can watch me use all these things that I talk about in this video in real life form, right? And that's the best thing about the Discord and my live stream. So if you guys want any more videos on tape or order flow, make sure to comment down below. Make sure to watch my live streams, and I'll see you guys on the next video. Peace.